Welcome to Every Dollar Counts with Josh and Jay, a shot of true serum for your investment and insurance questions. I'm Josh Knoll, the owner of Gulf Coast Financial Advisors, and I'm joined by my co-host, Mr. Jay Stubbs, the director of the Gulf Coast for Concourse Financial Group. We are brought to you on the Gulf Coast Financial Advisors Podcast Network. Jay, my friend, my buddy, how you doing?
Josh, I'm doing great. It's good to be here in studio, Deep Fried Studios in downtown Mobile with our producer, Johnny Gwynn. And the best thing is we're inside air conditioning.
Yes, we are. Now, for this episode, Jay, you and I get to nerd out a little bit on something that we both know, I would say, in pretty great detail, disability income insurance. So we're going to talk about the importance of disability income insurance. You're going to hear us refer to it as DI, common abbreviation. And we're going to be talking about owner-operators. Now, we're going to dive into more what we mean when we talk about owner-operator, but we're going to talk about those folks that need to have an answer. Where does the income come from if they can't work? Medical professionals, business owners, anyone that needs income that is reliant on their ability to either mentally and or physically produce that income. What happens if they can't? But before we dive into all that, though, we're going to have our friends from Sloth Racer kick us off. Quick housekeeping for compliance. Jay Stubbs and Concourse Financial Group are not affiliated with Prime Capital Investment Advisors, Qualified Plan Advisors, or Gulf Coast Financial Advisors. And Josh Knoll is not affiliated with Concourse Financial Group. Now, Jay, before we get into our topic today, our regular listeners are going to notice a change in our opening, a change in the name from First Protective to Concourse Financial Group. So our last episode, we touched on it briefly, the mid-year economic update episode. But why don't we go ahead for this episode, give us a little background on what happened with that changeover.
Yeah, Josh, thanks for asking. It's just simply a name and a brand change from First Protective to Concourse Financial Group. Our parent company, Protective Life Corporation, based in Birmingham, who also has a parent company, Daiichi Life, out of Japan, they decided to consolidate two distribution companies and our broker-dealer investment advisor. So they took Protective Life Distributors, they took First Protective, and then they took Pro Equities, our broker-dealer and our investment advisor, and consolidated them under one umbrella, Concourse Financial Group. So I am part of Concourse Financial Group Agency, which of course would be all things insurance. And then we have Concourse Financial Distributors, we have Concourse Financial BD, broker-dealer, and then we have Concourse Financial Investment Advisor. All it really is change of a color scheme and a name and a brand, but it highlights us in more of the target advisor market, who is the firm or the individual like you who says, I want to work with a firm who understands what I do each and every day for my clients, and I need them to have a specialty and help me out. So really doesn't change what I do. I still work for the advisors in and around the Gulf Coast on all of their risk management needs when it comes to their clients and their prospect efforts. I also just means you've got to read a different compliance section now.
All right, so Jay, what I want to do, I'm going to kind of lay out the basics of disability income and the components of it, and then we're going to do a quick deep dive into how those things play together, how you can build a plan for yourself, the importance of it, so on and so forth. So for those of you all that are not super familiar with disability income insurance or maybe want to learn more, in a nutshell, disability income or DI is a insurance policy that can be offered both through a group setting or an individual setting that is going to kick in if you are unable to work due to a physical ailment or a mental ailment. Now, that's a really broad definition. So what Jay and I are going to do is we're going to take that basic foundation and we're going to give you quite a bit more detail on what that really means. So Jay, what I want to do first is we're going to lay out the basic components of DI, which would be the benefit period, the benefit amount, and of course, elimination period. So let's start stitching that together for folks that are curious about, do I need DI or is the DI I have enough? What's the difference between group and individual, and how do those components come into play?
I'll first start with most everybody that works for a company, even small mom and pop operations, even to medium and large size companies, have the option, or they should have the option, of getting some sort of protection or what we call paycheck protection. We've seen the commercials through the years, Aflac and companies like that, where you can get short-term disability protection for your paycheck. You can also get some long-term disability to protect your paycheck, but sometimes that is employer paid for, and it only goes with working for that company. You can't take it with you, which means in our world that's called portable or portability. So if you go and work for someone else, you don't get to take your plan with you unless that next company has an option for you to get in. The other thing is to consider, and this is a big one to know about, is if the employer is paying a premium for that disability plan, then you're going to be taxed on that benefit when you start to receive it. And a lot of people don't know that. And then the third component of having an employer-sponsored disability protection plan is the fact that sometimes it only covers your base salary. It doesn't include your bonuses or your commissions or anything that might be tied to performance, sales performance. So a lot of people don't realize that, oh gosh, it's, I make X amount of dollars a year is for my base salary, but I make twice that in my compensation for performance. And sometimes a disability plan at an employer does not cover performance comp. So some things to consider for those who think, oh, I've got employer disability I've got it through my work and I'm covered. Well, evaluate your plan, pull out your document, make sure that the amount of money that you're going to receive and the money that you will more than likely be taxed on is enough money to pay the bills that are going to continue to come into the mailbox, even as you are sitting at home not able to earn a living. So the things that continue to happen are mortgages the bills keep coming in, the utility bills keep coming in, the tax bills keep coming in. Those dollars need to be found somewhere. And if you're not earning a living, then because you're disabled or you're cognitively impaired, then man, I sure wish, that's when you say, I sure wish I'd gotten or had a longer conversation about protecting my income.
No doubt. All right, so I got one statement on something you said, and I got another question for you. But you mentioned short-term versus long-term. So short-term disability income insurance, generally speaking, it covers you for up to 2 years. You heard Jay mention Aflac. I have some experience with Aflac. Aflac offers on their group setting 3 months, 6 months, 12 months, 24 months. That's the options that you have. So that's short-term disability. What that means is, let's say you have 12 months worth of coverage. At the end of that 12 months, that coverage will stop, period. It's done. Long-term, generally speaking, is 2 years or more. And a lot of times you'll see coverage plans of 5 years, 10 years, or what they say to SSN, is that right, to Social Security, which 65/67. So a young person...
Even 70 now.
Yeah, even 70, yeah. So a person can be younger, or any age really, and they can get a long-term disability plan that is going to cover them until, quote-unquote, retirement age. So we'll circle back to that. But first, Jay, I want to talk about, in our opening, we specifically mentioned owner-operators. So for those who are listening, describe what you mean by that.
Well, if I am a business owner and operator, that's kind of like, and we'll use Johnny Gwynn, the producer of Deep Fried Studios, as a prime example. Johnny is at his production desk day in and day out, wearing a headphone, using his equipment. He has to sit down. He has to get up. He has to move things around. He's got to be able to hear intently. He's got to be able to see. So Johnny is an operator of sorts. Johnny is also the owner of the studio. So not only he gets the profitability of owning the business, but he operates in it day to day. Contrast that to somebody who's not an owner-operator. They're just an owner. So let's say Johnny one day listening to this and probably put a smile on his face. He's got several producers under Deep Fried Studios that are working on his behalf. And Johnny's, down at the beach hanging out and enjoying the retirement life, but he still owns the business. So Johnny, as an owner-operator, needs to protect his income today, whereas he might not need to worry about protecting his income down the road if he's not operating in the business day in and day out. We see a lot of businesses around the Gulf Coast who are owner-operators. Right. Josh, you're an owner-operator.
100%.
Johnny's an owner-operator. Restaurant owners are owner-operators unless they've been around for a long time and they're paying a general manager to take care of the day-to-day operations. Anyone that you can think of that is an owner-operator needs to make sure that their income is protected if a disabling event occurs. And sometimes, more often than not, the group policies that they can get in place for their company, they don't cover the amount of money that owner-operator is making. That's when we have to carve out a specialized plan for them to get a long-term horizon set up so that they have money coming in, direct deposited, making sure that they are able to pay the bills, not only at the business, but at the household. There's two families in an owner-operator. There's the business family, and then there's the family, the kids and the spouse at home who are working hard to support. The business owner's working hard to support both. And if some unforeseen circumstance occurs and disabling event occurs, whether it's physical or mental, you want to make sure that compensation can still come into the business and still come into the household.
So Jay, before I want to transition at some point to a particular part of the industry that DI is really, really prevalent in, that's healthcare. But before I do that, we just talked about owner operators. We just talked about DI. How do people, somebody sitting here listening, how do I qualify for it, especially if maybe it's not offered on a group setting?
Well, you talk with a specialized person like yourself, an advisor, or anybody that says I can help you with that. Specifically, licensed people. They have to be a health licensed individual in the state in which you reside. So here in Alabama, you've got to have a health license. Josh, you've got a health license, and have helped lots of people with their disability income protection plan. But you actually would have to show them the proof of your income. Especially if you're asking for a benefit over $6,000 a month, and in round figures, annual figures, that's $72,000 a year, if I did my math correctly. So if you're trying to compensate or protect anything above $75,000, let's say, then you need to show them the proof that you are making that over that amount. If you just need to protect $3,000 or $4,000 or $5,000 a year, or a month, then they'll take your word for it.
Right.
They may want to see one pay statement or pay stub along those lines. But if you're looking for over $6,000 in protection, they want to see your income tax returns for the last couple of years just to prove, hey, yeah, I'm making that amount of money. So that's the financial component. The next component is your health. Where are you currently? And it's a different kind of insurance underwriting in disability world. They call it morbidity insurance, which is how well is our body reacting to what we do to it each and every day, versus mortality, which is the life insurance way that they price things. So morbidity, they're going to ask you a lot of questions. Have you ever had surgery on an elbow or a knee or a hip? Do you have any medications you're taking for any ailments? Have you ever seen a chiropractor? They're going to ask you some questions specific to things that they could have to pay a claim on down the road. So insurance companies, you're going to do the traditional interview with to answer all the typical medical questions, but they're going to look a little bit deeper into your history of your body. And also your cognitive, your mental stability, and make sure you're not taking any medications for depression and things like that. Doesn't mean you can't get disability income protection because you have some of that going on. It just means you might get something excluded. Right. So, Josh, you've got a knee issue, I guess surgically repaired a couple of years ago. Yeah. A disability income provider may say, hey, we're going to exclude that for the next couple of years just to make sure that knee does not come back to bite us in the butt if you should go down for the count. And you would say, okay, I'm good with that. So everything else is I'm covered? Yeah. And then once that exclusion period is up, then you're back on a regular disability type of plan. But financial, you have to prove you're making the amount of money you're going to protect. And then morbidity, you're going to have to make sure and tell the insurance company, hey, my body's good, my mind is good. I just need to protect the income.
Jay, I want to pivot to a little subsegment designed towards medical professionals because it kind of makes it easy for us to discuss own occupation. So we've been discussing disability income kind of in broad terms. We're going to finish the episode by kind of talking about how you design your plan and how you take those components into play. But before we do that, Jay, I want to talk about own occupation. It's something that has been out there for many, many years, but I feel like it's really gotten hyper-specific and probably better defined over the last several years as it comes to these policies. Majority of the time where I see it come into play, not always, it can be any business owner, but especially in the medical professional, especially if you're a highly skilled, highly specifically trained individual. Let's talk about a little bit about what is own occupation and why is it important.
You want to have a definition inside of your disability contract with whichever disability company that gives you your own occupation coverage that states, hey, if I'm not able to do the job that I am skilled and trained and have worked hard and gone and got an education in order to do that job, many, many years, hundreds and thousands of hours of work put into the education and the training and the skill set in order to do this particular function. If I can't do that function, my own occupation that drives home the most amount of money for my family and my household, then I can be on disability claim. However, can I go do something else with my skill set and my training? So the prime example here is, and I'll give you two examples. Johnny, as an owner operator here at Deep Road Studios, he's got to be able to do those things at his production desk. And if he has a firework blow up next to his ear on July 4th and he has tinnitus or an ear or ear trouble, or something happens bad and he can't function, he could technically be on short-term disability or, heaven forbid, long-term disability. But Johnny can still go do podcasting and other things in the world. But if his own occupation definition included that, then he could still be on disability claim, receiving a benefit, helping him offset his business bills and his personal bills at home, and still go make money doing something else in his trade. The other prime example is a highly skilled surgeon in the medical community. If they have a hand injury or a neck injury or a back injury where it makes them difficult to be able to perform surgery, they may be considering, they definitely need to consider a disability plan with an own occupation that states, hey, you can't surgically perform, you can go on disability claim. And if you go on disability claim, we're going to pay you that money every month to help make up for what the money you're lost making. But you can still go do something else in the medical field. You can be a consultant. You can go and be a general practitioner, but you just can't be a surgeon. So that's own occupation, a couple of high-level explanations of where somebody would want to consider making sure the definitions are in that contract to where they can definitely go make some money doing something else if they are capable mentally and physically. But if they can't do their specific skilled, trained job, they can get a disability benefit paid to them.
Yeah, and Jay, to be fair, as we're wrapping up the show, a lot of people think of disability income and they think, oh man, that's going to be so expensive. A lot of it is designing it to fit your budget, to fit your life. Disability income, even with ONOC, is not necessarily going to it's definitely not going to give you more than you made. So there's some ways to work around that. With the benefit period, you heard Jay and I talk about the length of the coverage. That's the benefit period. So maybe there's a situation where it doesn't fit the budget to go all the way to retirement age. You can look at a shorter term benefit period. You can knock the benefit amount down. You can, take a little bit less, whatever is the base number you need to pay your monthly bills. And then elimination period. The longer that you can wait on the insurance companies who start paying the benefits, the cheaper your rate's going to be. So you can take those three factors and you can kind of mix them in a mixing bowl, and you can design something specific to your particular needs that's going to fit your budget. It'd be surprised.
I would like to point out here, Josh, that the magic percentage that most people want to consider covering is 60% of their income. So round figures, if I make $100,000 a year and I have a disability policy that I own, I maintain care, custody, and control of that. That means I'm paying a premium for it. We're not talking about employer disability coverage here. We're talking about my own plan. Then I am not deducting those premiums, so I can receive that benefit income tax free. So just think, if I make $100,000 a year in today's tax environment, we're probably paying some taxes and some Social Security on that. So I need to make sure I have at least $60,000 a year or $5,000 a month coming into the household in order to make sure the bills get paid. That's probably what's coming into the household for a $100,000 salary and comp plan anyway. So we want to try and replace 60% of your income. It doesn't matter if you make $100,000 a year, $50,000 a year, or $1 million a year. It needs to have, you want to look at a plan of 60% coverage. And lots of companies have rules where they're only going to give you a certain amount of monthly benefit. So you might have to have two plans. If you make over $500,000 a year, you might need a plan with company A and a plan with company B. And we do a laddered disability plan in that regard. So think about the percentages that you want to cover. You get to make that choice and what that monthly dollar amount is. You also get to design your waiting period or your elimination period. That is the time frame before the benefit kicks in. You can do 30 days if you don't have a lot of money sitting in the checking accounts or savings or investment account that you can pull from and help pay the bills. You can do the traditional 90-day elimination period, which is what we see most of the time. Some people can push it out to 180 days because you've worked hard to build them a rainy day fund, and they've got that asset sitting there that's protected and they can use it to pay bills. We've even got people that can go all the way out to 365 days of elimination, a full year. Maybe they've got plenty of money to pay the bills, but if a long-term disabling event kicks in, they know that after 1 year they can go and file that claim and a benefit would start. So that's the next component that they get to choose, is the elimination period. And then the benefit period, you mentioned how long that benefit will come into the household. So people can choose 2-year benefit periods, 5-year benefit periods, to age 65, to age 70. The world is their oyster when it comes to designing the plan. And ultimately, they want to sit down with an advisor like you and design a plan that makes sense for them financially, but also makes sense that if that disabling event does occur, they're not going to be worrying, where am I going to pay these bills? How am I going to take care of my family?
Well, I think that's a great way to wrap up the show, man. So listeners, if you'd like to have a conversation about disability income insurance, or DI again for short, you can call me at 251-327-2124, or you can set an appointment via my website at gulfcoastfa.com. That's gulfcoastfa as in financialadvisor.com. To all you independent and semi-independent advisors and agents out there hearing this and hearing the value that Jay Stubbs could bring to your practice like he does to mine, you can find him at jstubbs.com. That's JAYSTUBBS.com. So, Jay, great job again. That's something, the folks listening to that episode can tell you and I are pretty passionate about it. We've done it both for many years, and I've seen it kick in and be a lifesaver, right?
I have seen and heard the stories of good and bad, and the bad get ugly. So you want to make sure from a financial protection standpoint that you've got a disability plan in place to protect that income and your household and your business.
Yep, totally agree. Well, many thanks to our producer, Johnny Gwynn, Deep Fried Studios. Many thanks to my co-host, Jay Stubbs, and always a huge shout out to all y'all that have joined Jay and I on this journey, and to those of you that are joining us now. Do me a favor, please subscribe on the Apple Podcast app or wherever you find your favorite podcasts. And while you're there, you would be doing us a huge favor if you would rate and review the show. It helps other listeners like you find us. Lastly, you like the show music? Go check out slothracerband.com. That's slothracerband.com. And they're going to take us home now. This has been Every Dollar Counts with Josh and Jay. Advisory services offered through Prime Capital Investment Advisors, LLC, PCIA, a federally registered investment advisor. PCIA, doing business as Prime Capital Wealth Management, PCWM, and Qualified Plan Advisors, QPA. Gulf Coast Financial Advisors is independent of Prime Capital Advisors. Information presented is for educational purposes only, is not an offer or solicitation for the sale or purchase of any securities. All investments involve risk, and unless otherwise stated, be sure to consult a tax professional before implementing any tax or investment strategies.